Okay, big day. Interest rates have gone up again. We knew that was going to happen. We covered that in yesterday's video. But what's happened? Because I've not just read that the interest rates have gone up, which a lot of people have done and then have observations on it. I've actually read through all the information on the Bank of England website. And I've watched Andrew Bailey's press conference after, because there's a lot of information in there that you can miss and little subtleties that I think are very important for us to understand as property investors. So let's get into that. But before we do that, very quickly like this video, guys. That really helps me with the YouTube algorithm. I want to get more eyeballs on my content. Please subscribe to the channel and hit the bell. We're nearly at 5,000 subscribers. We're just about to hit 4,000 and we're rolling towards 5,000. We want to hit that as soon as possible. So do share the channel with other people as well and subscribe yourself. So rates have gone up. We knew this was going to happen, right? Rates have gone up from 3.5% to 4%. That was always going to happen because inflation is still there. It's dropping, but we've got to follow the monetary policy. The Bank of England's got to be seen to be doing everything. If they suddenly start taking their foot off the pedal, inflation could surge again, and that's not good for anyone. So I've got notes, just in case you're wondering, why am I looking down? Because there was a lot. I've watched about an hour and a half of content on this today. And so I really wanted to get a good understanding. So rates are at a 14 to 15 year high. Some places are saying 15 years. So that's expensive, right? It means mortgage payments are going to go up. Now, a lot of people aren't necessarily impacted by this today because they're in a fixed rate. And so people worry about something that's not even happening to them. I've got friends that are in 5-year deals. They've done 1 year of the deal and they're worried about this, right? If you're in a long fixed deal, then this isn't going to impact you right now. So don't worry about it. The people that do need to worry are the ones that are coming off deals between now and the end of 2023, because their renewals are going to be a little bit higher or significantly higher, depending on how good the rate was. Now, the Bank of England has 9 people that make a decision on rates, and let's look at how they voted. So 7 of them voted to increase rates versus 2 that said keep the rates the same. And that information is useful. That's actually the same as last time. But what's interesting there is nobody, not one of them, is looking to reduce the rates right now, right? So that's an indication there. Now, the Bank of England is confident that inflation has peaked. So yeah, inflation has peaked now. And we're seeing that worldwide, aren't we? We're seeing other countries' inflation is starting to come down. Ours has come down a tiny little amount, but it is starting to come down. Now, why they're confident on that as well is a lot of the inflation has been due to energy prices. Now, there's various things that cause the inflation, wasn't there? There was printing of money, there was a pandemic, and there was the energy crisis as well. And that caused a lot of issues because when energy goes up, that impacts so many businesses, doesn't it? Because if you think about it, the food is what's going up quite a lot at the moment. And they mentioned that. They said food is really rocketing. And that really impacts poorer people because a bigger chunk of their percentage that they have each month is spent on food. Whereas someone that's earning 10 grand a month, they might spend 500 quid on food. It's not going to hit them so bad. But if you were on benefits and you're spending 300 quid on food, then that's going to really hurt you. And so inflation and food prices goes up because of energy, because of things like transportation costs, things like cooking the food, making the packaging, heating the warehouse. All of these things make a big difference. And so what's interesting is that gas prices have gone down as much as 50% now, and future energy prices have gone down significantly to prior to all of this inflation starting. So we're actually looking good for energy prices going forward, and that gives them more confidence. Now, one thing that really does worry them, and the uncertain thing, is wages. Now, wages, because we have a lot of people that have left the labour market, and they were talking about people that are 50 that have retired early. So there's a lot of people that have gone out of the labour market that are 50 to 60 early that have indicated that they're unlikely to come back. That means we still have a skill shortage, which is why you're not seeing lots of unemployment at the moment, because some businesses still need staff and can't actually recruit good quality people. Now, that skill shortage is meaning that there has been raises in wages, and so at the wage, can't even speak, the wages have gone up around 7%. Now, if that carries on, which is, look, I know when I say this, and you need to really understand that I believe that they do need a pay rise for what they do, but when the nurses are going on strike and the teachers are going on strike, the government has got a problem, because if they suddenly give them 10% pay rises, that's going to contribute to inflation. And so what would be better is if we didn't have inflation and we gave them a pay rise anyway, because they're definitely underpaid and they should be getting way more than they do. But that is a consideration. And so you call that a wage spiral. And so that, if you get into that, can be a big problem. So wages have, on average, have gone up 7%, which is lower than inflation, obviously. So that's a consideration, and that they feel is one of the bigger threats this year. So energy prices are down, which is good. Jeremy Hunt, he put a statement out and he was saying, look, inflation is just a stealth tax, and they feel that actually takes more money out of our pocket than income tax or VAT or any of these things. And so that's a real worry. They also said that they're looking to halve inflation this year, get it down to 5%. That's the government target, and they're pretty confident on that, but we'll see, right? We know how these things play out, right? And so inflation, the Bank of England, they kept reiterating, they think the second half of the year is going to drop off a cliff. And so things that I'm reading and listening to as well indicate that they could be right on that. Global supply chains are easing. Food costs are going down internationally. And so that hopefully will help us going forward as well. And so that's the main message, is that inflation is going down. Now, interest rates going up. One really great thing was that questioned at the press conference, the Bank of England can't just say, look, we're going to drop the rates later in the year, because otherwise it doesn't have any impact what they're doing today. So they've got to be very careful how they deliver the message. But when asked about, is this the peak of interest rates, there was an indication that possibly this could be the peak in interest rates now. And that's good news. And that's because inflation is looking at this severe drop towards the end of the year. Now, we were looking at 4.5%. In fact, after the mini budget, we were talking about the base rate peaking at 6.5%. And so that is not looking likely anymore. 4.5 is still possible. But if the forecasts play out that the Bank of England have put on the table today, it's possible, not guaranteed, but it's possible that this interest rate may stick at 4% for a little while longer. Now, we've seen smaller rate rises in America yesterday. They were looking at a 0.5% rate rise, and they did 0.25%. They're slowing down the rises in interest rates there because they feel that what they've done is working. It's just lagging. The data massively lags. Like we talk about house prices lagging, inflation data takes a while to come through as well. So we've always got that lagging indicator. Now, mortgages, what does this mean for us? Because we're a property channel, right? What does this mean for mortgage people? Now, if you're on a variable rate, which is not many people anymore, it's around 20% of the market. 2008, it was around 80% of the market, which is why it was such a crisis and a carnage times back then. But rates, if you're on the variable rate, you're going to get this pushed onto you straight away. I've got one mortgage on a variable rate, but it's a repayment mortgage on a residential property that I've got so far through that mortgage that it probably will go up like a £5 or something like that. But for some people, this is going to make a difference. Where you're going to see this make a bigger difference is when you do a renewal. Now, saying that, a lot of lenders are believed, because they see that the interest rates are going down in the future, that's their belief, is that they feel that they've already priced in this 4% rate, right? That's good. And so if that's true, then we'll leave it 48 hours and we can have a look and see what mortgage rates are on the market. But possibly this means that this is the peak, and this is good news if that is the case, because now whatever happens with house prices, if we know roughly where we're getting to, the market can adjust accordingly, can't it? And that's what will happen. And so prices are expected to drop. In fact, I'm going to be making a video today to put out tomorrow about the drop in house prices, so look out for that. Look, if we have more predictability, that's where we've had problems, right? People haven't been buying houses or selling houses because we've got no predictability. But as we're getting to that point now where we get predictability, people will start putting their houses on the market. Buyers will start coming back into the market. There'll be a limit on what they can afford, so their affordability might have gone down, but we'll start to get a true reflection of where house prices will be and how much they potentially will drop by the end of 2023. So there's a lot going on. I hope this makes sense to you. I hope I've analysed this well enough for you guys to understand. Maybe you disagree with what I've said. Maybe you don't disagree with what I've said because I'm just the messenger in this video, really, but you disagree with what the Bank of England are doing. They're wrong sometimes. The government's wrong sometimes as well. Do comment below. Let me know your thoughts and opinions. Do smash the like button, guys. That's really, really important for me. Subscribe if you didn't earlier. And look, if you want to learn how to buy a house for £1 because you're not worried about having the impact of mortgage rates then do go and check out this video right here.